secure.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, yes, the market weakness continues, but we'll address some earnings now. Anupam Rasayan posted a good set of Q3 earnings. Revenue is up 44%, EBITDA is up 34% as well, and profits have also seen some growth. The stock has fallen from the highs, though, at the day's low right now. Vishal Thakkar, the Deputy CFO of the company, is joining us now to discuss the earnings fine print. Mr. Thakkar, good afternoon. Thank you so much for joining us. Well, this top-line growth of 44%, can you tell us how much of it was impacted due to the fire incident that we saw in the quarter gone by, and what is the split between volumes and realizations this quarter?
Thank you for having us on your show. In terms of, yes, the real numbers have been good for us. Yes, because of the fire incident, we would have lost around 15 crores a month, so it should be around 45 odd crores of loss of revenue that we would have seen because of this. Another thing, in terms of volume and price, I think they both have been playing a good role. So if you really look at it, primarily product mix, change in product mix, volume and price, all three have given a fairly an even Stevens kind of a share in terms of the growth. So yeah, we're looking at a good growth. The market looks good for us, and as we always continue to mention, that the business model that we have created, which is more having a long-term contracts with long-term visibility of demand from our customers, along with a pass-through in terms of pricing, has really played out well for us, and that's holding us well.
Let's talk about those long-term contracts itself. You signed 2 contracts with one of the European crop protection companies, etc. How big are the sizes of these contracts, and at the same time, what revenue are you expecting in this entire fiscal and importantly the next fiscal?
Sure. So Mangalam, in terms of those 2 contracts, those 2 contracts were not very large ones. They were looking at around about 100 crores of revenue over the next 3 to 5 years. The question is that were very critical, very interesting for us, because these were the first time they would be manufactured in India and moved from Europe. So that was something very good, and the speed at which we could commercialize it for our customers was something very interesting, and that's the reason we shared that with the market as well. Coming back to the volume in terms of revenue growth, as we have been mentioning in the past as well, we would continue to grow at our historical 5-year growth rate, and we should try and do better than that. But let's guide at the numbers around what we have been doing it for last 5 years.
What would that number be? I mean, I'm just looking at your last 5-year revenue CAGR. It is closer to around 30 odd %. Is that the growth that you're guiding for? I mean, so, is that you're targeting?
So I would tend to go between 25 to 30. I would go with that, because that's where we would really keep it for now.
30% growth is what you're looking at for the full year, is it?
Sorry, I couldn't hear you well. Can you just?
Is this your full year growth target for FY24?
Full year FY24, we would be looking at around about 25 to 30% growth rate. Okay. Let's see where we end up at.
So 70% of your revenues comes from the export market. Can you tell us a little bit about that? How have things shaped up? Are you seeing any slowdown in any key markets? And if yes, what would this mean for your target?
Okay, so here if you see that historically our markets has been export oriented, and our large customers have been in terms of Europe, Singapore and Japan largely. And if you see till now also, we have been seeing a buoyancy in terms of demand. We have not seen any revision in the demand from our customers. In fact, in a couple of contracts, the base volume that they had promised has only increased. So to that extent, we are seeing a fair bit of a confidence in terms of the demand for now, at least. And if you look at the conversation that we have been having with our current and potential customers across all the 3 segments, especially on the fluoro side, we are seeing very, very encouraging conversations there.
Okay.
So for now, I think we would be comfortable with what we have been guiding now.
Okay, so when you talk about the fluorination segment, already contributed around 15% to the top line. You have spoken about expansion plans as well here. 420 crore rupees, if I'm not mistaken. You also raised funds via QIP. What are the expansion plans looking like right now? And once all of this does come on stream, say by FY25, what kind of revenues are you looking at, and margins as well? Because raw material pressures continue for you as well. Do you see them abating? And with this expansion, will you be able to save some costs as well?
So let me put it in two perspectives. Let's first talk about the capacity first. So capacity, we believe that we should be able to do it in 24 months. We should have the capacity in place, give or take a quarter. That's where we would see. In terms of revenue, we would, as I said, we will continue to grow as we have been mentioning. Our next 5-year growth should be in that kind of a time, that kind of a range. Probably if we can do better, great, but let's put it at those numbers. In terms of margin, as we said, again, the business model that we have deployed, I think margins are practically the numbers that we have been guiding, anything between 26 to 28% of EBITDA margin. I think we will continue to be there. We do not see it moving anywhere otherwise. Probably a quarter or two we may have a higher, and quarter or two we may have a little less, a couple of 100 basis points plus or minus on that is where we would end up.
All right, Vishal, thank you so much for joining in. Would have loved to speak a lot more with you, but maybe another time. Now's not the day, because the decline that we're seeing in the markets right now is only accelerating on its way down. In fact, now Adani Ports is down 18%. When we started the show, it was down 12%. No mean feat out there. It's only further gone lower, and giving it company on a lot of these other companies as well. We have Bajaj Finance, which has slipped to the low point of trade. In absolute terms, not too much, but 2% from the highs. SBI is down around 4%. IndusInd Bank, the entire banking pack, the banking index is now down over 1,200 points. So we'll just keep an eye out on the markets itself. Asian Paints too has corrected from the highs. The FMCG pack was actually holding up, but now that's giving way as well. The Nifty on the brink of breaking 17,600. The Sensex down 1,000 points. It's time now for a short break, but as we do that, let's also apprise you of the CNBC-TV18 budget quiz. Remember, there are prizes to be won every day. We gave you the question at 9:14 today, but in case you missed it, here's today's question again. The Finance Minister has asked SEBI in the budget speech to raise the minimum public shareholding in companies to 35% to 25%. When was that? Which Finance Minister was that? A. Arun Jaitley, B. Piyush Goyal, C. Nirmala Sitharaman, D. Pranab Mukherjee. Send us your answers on Twitter. Post them as a comment on the question tweet at CNBC-TV18 News. Use the hashtag budget with CNBC-TV18. Hurry, send us your answers. Remember, we will announce the winner at 3 p.m. today.